If you're selling an inherited house, do you have to pay capital gains taxes? This is a great question because you want to save as much of that tax money as possible. In most cases, the answer is actually going to be little to none. Let me explain why. If you're dealing with an inherited house in Austin or Central Texas, my name is Nate Clark. I help families sell inherited probate properties every single week here in Central Texas. Let's get into the answer to this question. So when somebody inherits property and sells it at a later date, capital gains tax works completely different to if it was something that you purchased yourself within your lifetime. The key concept to understand is something called stepped up basis. So what is stepped up basis in plain English? In most cases, the value of property when somebody passes away is actually reset to the time of death. So the fair market value when somebody passes away actually becomes the cost basis for the heirs that inherit that property. So instead of paying capital gains based on what the deceased paid for that house originally, you're paying capital gains off of any gain over when the deceased actually passed away and the fair market value at that point in time. Why does this matter? So let's say, as an example, the house was originally purchased years ago for $200,000, but at the time of death, it's established that the fair market value was $500,000. If you sell the house shortly after inheriting it for around $500,000, there may be little or no capital gains tax due because there's little additional value gained over that stepped up basis of $500,000. This is why many inherited homes do not result in large capital gains tax. Now, you could owe capital gains if you hold on to the property for a long time after inheriting it, the value increases significantly after the date of death, or you make major improvements and later sell at a higher price. In those cases, capital gains taxes would typically only apply to the value increase after inheritance, not the full ownership period. An important Texas note, Texas does not have a state capital gains tax. Any capital gains would be federal, which is why a lot of times this is a lot less than most people would expect going into selling inherited property. So a big mistake I see is heirs delaying a sale only because they assume they're going to be hit with a huge tax bill, when in reality, selling sooner actually typically minimizes capital gains exposure. That fear alone keeps a lot of families stuck longer than they need to be. So do you pay capital gains when selling a property? Yes, you may end up paying some capital gains, but it's typically going to be a lot smaller than you would expect due to stepped up basis. Waiting longer can actually mean that you have a larger tax bill due. If you're an heir or an executor trying to decide whether you want to sell inherited property now or later or make improvements or not, this is something I deal with all the time. I'm happy to give you my insight into your specific situation. All of my contact information is down below.